I'm not going to waste a lot of your time. I'm just going to jump into it. So the first trade that we took, or the first trade on here, was on the Aussie CAD. So this was a trade for 94 pips. So essentially, my reasoning behind this trade is, so the first thing I do when I'm looking to take a trade is I look at the higher time frame. I look for a higher time frame confirmation. So essentially, what I do is I go onto the daily chart. This is the first step on any trade I take. I go onto the daily chart. So this is the highest time frame that I look at. Sometimes I look at the weekly, but that's just to get like a general overview. So guys, don't forget, always get like a higher time frame perspective of any trade you're going to take. Because I see a lot of people taking trades on the 5, 3, and 1 minute. I mean, I don't want to speak out of turn because I don't want to say if you trade on the 1 minute, you're not going to make money, but you're not gonna you can't really see a lot on here. These are 1 minute bars. There's nothing you can see on here to tell you anything about what the market is doing. So that's why I like to go onto a higher time frame, kind of zoom in to see exactly what the hell the market is doing. So that's the first thing I do on every single trade that I take. So I look for a higher time frame confirmation, and I also look for support and resistance levels. Just in short, support levels are levels in the market where the price tends to bounce off. So this would be a support level. A resistance level is a place in the market where essentially they're both places in the market where price tends to jump off really. So these levels would be like a support level. Major structure essentially was what I call it. So this would be a major structure level. This would be a major structure level. These levels are levels where I tend to take my trades, and they also tend to be levels where I tend to exit my trades. So my reasoning behind this trade is essentially when I took this trade, we were looking at something like this. So the market had come down. Let me just get my arrow. The market had come down. I've read the trend. We've had a impulse move from here. We've had a new structure low. We've had an outside return. Just reading a trend. I mean, this is like technical analysis 101. There's nothing new here. There's a new structure low. There's an outside return. There's a new structure low. And then there was an outside return. So this is the level that we were looking at to take our trades. So now I've identified what the market is doing. I've identified the trend. We have a bearish trend. We have a very clear bearish trend. So the sellers are essentially in control of this market for this time period on this time frame. Okay, we're not talking about the weekly because you might have a different perspective on that. But for the daily chart, for the sake of this particular trade, we are bearish. So identify the trend, identify your structure levels. That's all we need to do on the daily chart. Now, sometimes I do drop down to the 4-hour. So that's your step one, identify the trend. Step two, identify your structure levels. Boom, that's all you need to do on the daily. Now you could drop down to the 4-hour and get like a mini Hawkeye view. I mean, if you really, really want to. But essentially, I really don't. I usually just drop down to my 1-hour chart. So guys, my 1-hour chart is where I take my trades. This is where the magic happens. So daily chart, 4-hour chart, general overview. 1-hour chart, 15-minute chart is for placing trades. So the 15-minute chart is the lowest time frame I tend to look at before I take a trade. So if you look at the lines I've drawn in, you have a new structure low, outside return, new structure low, outside return, new structure low. We've had our outside return. So before we took this trade, the market was here. This is what we were looking at right here. So if you have a look, guys, because we've identified this structure level, and the way you identify a structure level is essentially just looking at the way the market reacts on those levels. If you have a look, you can see we had a little consolidation. Let me just clean this up so it's getting a bit messy. Just take off all these lines so we don't get confused. Okay, excuse me. So if you have a look, the market has made a new structure low, outside return, and we've kind of consolidated on this level. The market has kind of pushed down, rejected, pushed back up. You can see we put in this nice rejection candle, this wick rejection candle. We bounced up, we came back down, bounced off this level again, rejected, came back down, bounced off it again, put in another rejection candle, bounced off, came the fourth time, bounced off, fifth time, sixth time, seventh time, and then finally we broke through. And then we came back to retest again. So guys, clearly something is happening here. Does that make any sense? I mean, this is essentially how I identify structure levels. I like to create a story behind these levels. I like to think of it as like a battle between the bulls and the bears. The bears are trying to push down, the bulls are rejecting them, pushing them back up. They're trying to push down, they get rejected over and over and over again. And then when they finally break through, now the bulls are trying to push back up and the bears are rejecting them, pushing them all the way back down. Now they come back up again. Now, because you've identified what's happening here, you can kind of predict what's going to happen. So since they're getting pushed away, chances are if they come back up to try again, they're probably going to get pushed away again. So I'm essentially waiting for the market to come back up to this level as it does into this structure level. Let me just take off this green one. And voila. Now this is the area where I take my trade. Now I've identified what's happening. I've predicted what's going to happen. Now there's two more steps. I need to decide what to do, and I need to finally execute my trade. So it's identify, predict, decide, execute. Now, how do I decide what to do? What am I looking for at this level? For me personally, from my trading plan, what I'm looking for two things at this level. I'm looking for the market to be oversold, okay? And I'm looking for a lower low, lower close candle. Does anyone know what any of those things mean? Give me a thumbs up if you know what those mean. Does anyone know what a relative strength index means? Or like a lower low, lower close candle, or a higher high, higher close candle? No? Cool. All right. So think about it this way. So it's all good and well that we understand that the bulls are pushing down, that the market is pushing down on any buying pressure. But how do we know exactly that it's going to happen at this area? Now, this is where I use my one and only indicator. Now, guys, I'm not a big indicator person, but I do employ one, and that is the relative strength index. If you look down on the bottom, you can see right here, the RSI. And what the RSI is, it tells you the speed as to how fast the buyers or the sellers are buying or selling a currency pair. So to put it in a simpler term, think about it this way. Think about it. I mean, let's say Justin Bieber like has a concert next week, and the tickets come out today. In the first hour of those tickets coming out, there's going to be a massive rush of tickets. There's going to be more tickets sold in the first couple of hours than there will be sold in the upcoming week. That's essentially what this is. So as the worst seats become available, there's going to be less and less and less buying of those tickets. And now if you extrapolate that into this pair, we've come up to this level. So people have been buying, and we get up to this level. Now we have the RSI overbought. So there's too many people buying, and now we are running out of steam. Now, if you look down, you can see, explaining RSI again, we have overbought and oversold. So if I'm looking to sell, I'm looking for the market to be overbought. If I'm looking to buy, I'm looking for the market to be oversold. It sounds a bit more complicated, but you get used to it as we go along. So there's a gauge down here between 0 and 100. So if the market is overbought, I'm looking for the gauge to be above 80. So as long as if I come on the chart that comes into this green area and I put my little finger on it, see the little finger I have here, and I look down, if it's above 80, then this market is overbought. Now guys, don't worry, this is gonna get super easy as we go along. Excuse me. So anything above 80 is overbought, and that's check one. The next thing I'm looking for is a lower low, lower close candle. So a lower low, lower close candle is a candle that breaks and closes below the lowest low of the previous candle. Let me say that again. A lower low, lower close candle is a candle that breaks and closes below the lowest low of the previous preceding candle. So if you have a look here, this is the candle that we are overbought on. If you look down, we're 98, massively overbought. There's only like 2 points till we get hit 100. So this is a massively overbought market. Now we're looking for the next candle to break and close below this green candle here. So the next candle would be this red candle. Now you ask yourself, has this candle broken below this candle? No, because if you have a look, this candle is well within this green candle. We need a candle that breaks and closes below this price level here. So this is not a lower low, lower close candle. And the next candle right here, this is a lower low, lower close candle. Why? Because if you have a look, the previous candle, which is now this red one, the market has broken and closed. If you look at the price, the closing price here, it is clearly below the lowest low of this previous candle. Now guys, I mean, this is recorded. You can feel free to like go back and listen to that again. I know it sounds complicated, but trust me, it's really very simple if you get used to it. Now, if you look at this market, the market is not an exact science. So this is where I enter. This price level here is my entry. But as you can see, the market kind of rallied again, and we kind of consolidated before we went to hit target. So guys, if you can see, my trading is very systematic. I have exactly the things I'm looking for for every trading style or trading plan, essentially. I mean, there's different ways I tackle the market, but in every individual trading method, I have one thing I'm looking for, a number of things I'm looking for, and once those are met, I take a trade. If any one of them are missing, I don't take a trade. Now the next question is, so now we know our entry. This is where we enter. Now, how do we place stops and targets? Now guys, my stop loss is I used to use a Fibonacci stop loss, a Fibonacci inversion stop loss. So I'd take my Fibonacci and I would kind of invert it. Now there's so many ways you can use. There's so many ways to place a stop loss. You can use an 80-hour stop loss, an average true range stop loss. You can use the Fibonacci inversion stop loss. You can use a 20-pip stop loss. I mean, it all depends on your back testing results. I mean, I found that I've kind of like gauged by eyeballing the market how it's gonna move really. But this is because I've been doing this for so many years. But I would recommend, if you're just starting to trade, that you have a set method on how you place your stop loss. But the general strict rule is that your stop loss must be above the structure level where you took the trade. So guys, don't forget, we usually take trades at structure, and we also take targets at structure. So we entered here, stops placed above structure, and targets if you at the retest of structure right here. As you can see, my target is just right here where we had our previous swing low. So we enter our structure, stops above structure, targets are structure. Now guys, let me run through this again. Start off through the daily, identify the trend, identify your structure levels. You've identified, now you predict what the market is going to do. You predict the market is going to come back to this area, check 2. Now you have to decide how you're going to enter the trade. We've decided that what we're looking for is the RSI overbought and a lower close candle. Check free. Now execute the trade. That's the easiest bit. Essentially, go onto your platform and place a trade. That's what that means. So identify, predict, decide, execute. Now this trade, give us a little 94 pip. It's a little 94 pip winner. A good way to start the week. But yeah, easy trade, first one. On to the next one. So this is a trade. Actually, I posted this on my Instagram. If you have a look back, it was on my stories. So I asked the question. I asked people. I mean, at the time when I posted it, all of this hadn't happened yet. So we never had this breakout. So I asked people where they thought this was gonna go, and a lot of people thought, the bulls are gonna break out this way. People thought the bears are gonna break out this way. If you ask me at that time, my honest answer would be I have no clue. I have no idea what was gonna happen in this trade, but I had a set plan on how to tackle this trade if and when we did break out, because we were gonna break out either way. Now I can't see the future. I'm not clairvoyant. I'm not a time traveler. I don't know what's gonna happen. But all you can do is have a plan as to how to tackle a trade like this. Now, guys, this is a classic descending triangle. So you've been pushing back and forth. The push up, the bulls push up, the bears push down, the bulls push up, the bears push down, kind of going back and forth. And we've kind of been going, kind of pushing ourselves into this little bottleneck here. Now, one or two things is going to happen. We're either going to break out this way or break out this way. We can't keep getting smaller and smaller. We have to, something has to happen. Now, my plan for this trade was just to wait for a breakout and just take a trade. It's literally as simple as that. If the bears had pushed down and we had a break, say for instance, we had a break this way, all I would do is take my trade and do something like this. And then this would be what I would have done. If it had a breakout this way, I would enter here at the breakout. I would put my stops again. Don't forget, stops above structure. So a little structure shelf here. This is your structure level. If you see the way the market is reacting to this level, like the previous example, this is clearly a psychological level in the market. This is clearly a support now to a resistance now turn support level. So we put our stops just right there, and then we put our targets down here at a major structure. So I've identified the structure level on the daily. Let's just go up to the daily. This is a structure level. This is a major structure level. And yeah, that's what I would have done. But in this case, we broke bullish, and I entered bullish. Now my target was again at this major structure level. And my entry was at the breakout. As you can see, we didn't make it, and we got stopped out for 25 pips. 25 pips, I mean, you have to take a risk. This time it didn't work out in our favor, but there's still nothing wrong with this trade. I would take this trade 10 times out of 10 because this was a solid trade. This was a solid back tested. This was a good trade. I mean, a good trade is not always a trade that you win. A good trade is a trade where you followed 100% of your rules of engagement, win, lose, or draw. Now, guys, I wasn't just taking this trade willy-nilly because it looked good. I took this trade because this is a trade I've back tested. This is a trade I know is profitable. Doesn't win 100% of the time. No trade wins 100% of the time. All you have to do is just execute your plan consistently, and you will come out on top, like we've done this week, as you've seen. So, guys, that's my another trading. As you can see, this is like completely different from what we just did in the Aussie CAD. But this is from consistently looking at the market and coming up with new ways to take advantage of the market. Now, I never had all these when I first started. This just kind of came to me as I looked more and more into the market. Now, this is why we're here. So you can actually find your way around the market. You don't have to trade the way I trade, but I would like for you to one day have your own view into the market, and you can actually take advantage and do things by yourself. Now, this trade unfortunately was a loser, which is fine. We're still ahead. Now, the next trade we looked at was the CAD yen. Now, this is a classic trend line breakout pattern. Now, this trade could have been tackled in one of two ways. Identify structure up here. There's a little structure. There's a major structure down here. There's another one down here, but that's far ways away. We don't have to worry about this one yet. So identify structure, identify the trend. So we identified before we had this breakout that the market was bullish. So if you have a look, new structure high, outside return, new structure high. We were meant to have an outside return and then new structure high again. But in this case, it didn't happen. Instead, we had a breakout. We came down to retest the trend line and the major structure level. We were supposed to bounce off if the trend held true, but we didn't. Instead, we broke. Now, before this happened, my mentality was bullish. I was looking to buy into this market. Again, guys, don't marry an idea. Don't marry a trade. If you have an idea in your head, always be willing. Always be flexible. Don't just stick to a bias. If you think, oh, the market is going up, and you just blind yourself to every other opportunity, every other thing that the market could do. No one can predict. Again, no one can know what the market is going to do 100% of the time. All you can do is read what the market is telling you. So anyways, we had a breakout, and guys, my breakouts are usually, I look at the 4 hour. The reason I look at the 4 hour for my breakouts is that on the 1 hour, the 1 hour is a little bit too, there's a lot more false breakouts on the 1 hour. Okay, you can have a candle breakout on the 1 hour and then just reverse and go the other way. So on the 1 hour, you could have a breakout, but on the 4 hour, sometimes it would just be a candle wick. It would just be something like this, which is not a breakout. A candle wick is not a breakout. This is a rejection candle. This is a clear bullish hammer candle. This is a rejection candle. But regardless, I take my breakouts on the 4 hour. I don't take it on the 1 hour because there's more chance of false breaks. I don't take it on the daily because by the time you realize there's a breakout, I mean, they're just risking too much, or the market is already left without you. So I find the good middle ground is to look at the 4 hour for a breakout. So we had a breakout here, and then this is essentially where I enter the market. Let me just go back to the 4 hour. So the breakout was here on this candle here, and you can see we entered here. Okay, remember, we enter at market. Where do we put our stops? Above structure. So this is your structure level. Above structure. Where is your target? At structure. So guys, structure is king. I mean, it baffles me how many people just kind of ignore the fundamentals of trading, or the technicals of trading in this case. I mean, trading 101, structure levels, technical analysis. People just kind of, I don't know. But yeah, so above structure, at structure. But if you have a look, there's another way we could have tackled this trade. So if you remember, I told you there's the lowest time frame where I take a trade is on the 15-minute. So some people would not be comfortable just taking a trade on a breakout. Some people are a little bit more conservative. So if you're a conservative trader, you might actually be looking for a breakout and then a retest. So if you're a breakout and retest trader, what you're waiting for is essentially the market to come out, break this trend line, break down, and then have a retest before you get into the trade. And that's definitely okay. If you have a look, we actually have a nice double top with RSI divergence. If you look down, the RSI is above 80. So sometimes for extra confirmation, I go down to the 15-minute, and all I'm looking for in a 15-minute is a double top or a double bottom and an RSI divergence. So what is RSI divergence? If you have a look here, the market is overbought, 85. If you look down bottom left, 85. And then on the retest of the double top, the RSI now is 67. What does that tell you? That tells you that on the retest on the same price level from the initial test of 85, the market is not as overbought as it was initially. So clearly, the buyers are not as strong as they were at this level. So this is overbought, it's 85. This is not as overbought, 67. So the sellers are more likely to take advantage. Now, again, I didn't need that. I mean, it would be nice if I maybe say, for instance, I missed this trade and we had another chance to like come up here, I would have entered again, but I caught this trade on time. And so we took advantage of it. So this was a nice 77 pip winner. Excuse me. And then we had a trade on the, oh, it's this mess here. We had a trade on Ethereum. So again, I posted this on my, let me just clean this up, it's a bit messy as well. I posted this on my Instagram as well. So again, just like the previous one, you know, this is a classic descending triangle again. So we're kind of bouncing around, bouncing around, bouncing around, bouncing around. And then what do we have here? So again, I identified what the market is doing. Okay. I identified that the market is kind of indecisive as to where it's going. So as we were here, I predicted what the market was going to do. I predicted that the market was going to bounce off this trend line and come up to retest this trend line. Then I decided how I was going to tackle this market. Oh, come on. So here we go. Here we go. Okay, so we had a retest, we had a bounce off here, then we came back up to retest this trend line. And if you have a look, what do we have here? This was a retest candle. If you look down on the RSI, what do you have? Massively overbought RSI. And then we have again, don't forget this is the 15 minutes, and all I'm looking for on the 15 minutes is a what? Double top, double bottom with RSI divergence. So we have a retest, initial test on a double top. Then we have a retest with RSI divergence. Initial test 89, on the retest 72, and then we have a nice winner here. But again, this is a trade that I didn't post because it ran away from me. So if you remember the previous candle, we had a breakout and we entered. As opposed to the first one that we took, we could have actually taken another trade, but you know, you tend to miss trades sometimes. It's okay. Just wait for the next one. Don't chase a trade. You miss trades, it's okay, brush it off, wait for the next one. So just like the previous example, we had a breakout on the 4-hour. This was the breakout on the 4-hour. Don't forget, higher time frame for breakouts. And then this would have been our entry price. Stops above structure, targets, go on to the daily. What's your major structure level? Look at that. That's why I put this line here. If you have a look, let me just get my arrow. The way the market reacts on this, at this level. We had a little breakout here, a little breakout here. So clearly, something is happening at this price level. So that would have been, that would have been our targets, but we missed out on this trade. Very similar to the previous example, but unfortunately, we didn't take advantage. But it's okay, on to the next one. On the EuroCAD, again, you identify what the market is doing. Just clean this off. This is the trade we took a while back. Here we go. So identify what the market is doing. It had a new structure low, outside return, new structure low, outside return, new structure low, and then we're having a nice outside return right here. Don't forget this is the daily. So let's just zoom in and go down to the 1 hour. So we had a new structure low. Then my prediction, I've identified a bearish market. Now I'm looking for the market to, I'm predicting a retest of this structure level right here. Guys, structure levels are very, very easy to identify. It's the area in the market where the market kind of stalls and consolidates. Very simple to, very easy to identify. You can just crunch up your chart and look for areas where the market clearly is having a bit of problem breaking through or breaking past. So we have a retest, and again, just like in the first example, look down, RSI is overbought 88, above 80 is overbought, so we have 88, this is well overbought. Then we look for a lower low, lower close candle, 88 here, and then lower low, lower close candle. And guys, be very, very technical. If you have a look, this is the lowest low of this candle, and we just broken close below that candle by like 2 pips. So this is our lower low, lower close candle. And of course, we put our stops above structure, and we'll put our targets at structure. This trade earned us an easy 155 pips. Easy money. And guys, it's really that simple. I know it's easy to look back now and say it's simple, but I understand that it wouldn't be at first. It's quite frustrating reading the markets, but if you just simplify it, it's ridiculous how easy it is to do. But anyways, this is another trade. I mean, there was quite a lot last week. We took about what 15 trades. I'm gonna rush them quickly. If you got any questions, you can of course ask me at any point. Or let's just leave it to the end, actually. Yeah. So this is another triangle, and of course you already know what I'm gonna say. I put it on my Instagram and asked, does anyone know what's gonna happen? Everyone has an opinion, but again, I didn't, because I don't know what's gonna happen. All I'm waiting for is a breakout. All right. So I'm looking for a breakout on the 4 hour. So the breakout happened here, right here. And again, guys, if you can see, we broke out, and then we had the retest. So if you're not an aggressive trader, you can wait for a retest for extra confirmation. But if you're an aggressive trader, you can just enter at the breakout here. So we broke out, major structure down here. This is where we take targets. Stop loss above structure, above the trend line. Safe area to place your stops. As you can see, the market broke out, came back to retest the trend line, before which we safely hid away behind the safety of structure, so we didn't get stopped out. And then we took our targets at structure. Easy work. This earned us 79 pips, or around 80 pips. On to the next trade. It's starting to get a bit it's starting to get a bit repetitive, isn't it? But guys, that's what your trades need to look like. Your trades need to be very robotic and repetitive. If it's not, then you're doing something wrong. So anyways, let me just clean this up so it doesn't look too messy. There we go. Okay, so identified what the market is doing. We have a bearish market. So we've come down to retest this structure level. So this is a counter trend trade. So normally we would be trading with the trend, But I am also a counter trend trader, meaning that I trade against the market. So what that means is I am looking for trades that go against the general direction of the market. So we have a bearish market here. If you have a look, new structure low, outside return, new structure low, outside return. We're looking for a new structure low. But because we have a very major structure level on the daily here, my prediction that we would have a little relief before we broke through. My general overview was that we were going to break through this structure level, but at least we would have a little relief before we came down to break through. Unfortunately, that didn't happen. But anyways, this is what I was looking for. I was looking for major structure identified. Then I was looking for RSI to be oversold. Guys, remember, overbought is above 80, oversold is below 20. If you look down, RSI is at 9. That is massively, massively oversold. And I'm looking for, in this case, a higher close candle. So it's the opposite of when I'm selling. Now I'm buying into the market. I'm looking for the opposite of what I'm looking for when I'm selling. So market is oversold on this candle. And then we have a candle that's broken and closed above the previous candle right here. You can see clearly this candle broke above and then closed above the previous candle here. But unfortunately, we got stopped out. It happens. Minus 72 pips. Ouch. But it's okay. Losses happen. You get used to it. You become numb to it. If you don't have it, if you can't handle losses, you might as well just pack it in now. I mean, I get people that say, "Oh, but Prince, that trade you posted on TradingView, you lost." I'm like, "Yeah, he did." Funny, isn't it? But yeah, people lose trades. I mean, I win about 7 out of 10 trades. You know, if I put on 10 trades, about 3 of them are gonna lose. Now we don't know how often, in what order that's gonna come. I could have 6 losses in a row, and then have 14 wins in a row. But I know at the end of the quarter, at the end of the year, I'm gonna be 70% accurate. But people just act like Forex is like an easy thing where you just kind of predict and you know exactly what's going to happen. And if it doesn't happen the way you want it to happen, then you're a terrible, terrible trader. No, the opposite is actually the case. You need to be able to know your statistics, how much you're going to lose, how often you lose, and just factor that into your trading. But yeah, guys, this is another slightly bigger loss that we took in the market last week. But overall, we're still in the green. I mean, we made 800 pips last week. We closed 800 pips last week, and that could have been more if we didn't take losses. But losses do happen. I'm sorry to tell you, but you are going to take losses. But as long as you have an edge and you have a plan, you are going to make money, as I'm showing you now. So this is a pound CAD. This is the trade we closed on the day, Almaz. I remember I added you to the group on this day, and Ivo closed the trade on the pound CAD. And Ivo got a little bit greedy, I'm not gonna lie, and he wanted to take targets a little bit lower. So let's just run through this one. Let me just take this off. This is a trade we took earlier last week for 79 pips, but that's still on there. Let me just take that off. So yeah, let's just run through the boring process again. So identify what the market is doing. So this is clearly a bearish market. So new structure low, outside return, new structure low, outside return, blah, 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 blah. Okay, so the market is down here. Identify the structure levels. Boom, here and here. Now drop down to your trading time frame. Just take that off. So the market was here, and we've identified a bearish market. We've predicted a retrace to this minor structure level. And then we decide how we're going to attack the market. So what are we looking for? RSI overbought. This is starting to get repetitive, isn't it? We look for the same thing over and over again. RSI overbought, check. Look down, 81, check. Lower, lower, lower close candle, right here. Nope, that is not a lower, lower, lower close candle. Right here, nope. Lower, lower, lower close candle is a candle that breaks and closes below the previous candle, so right here. And guys, again, just because you identify it doesn't mean it's going to happen exactly the way you want it to. The market kind of rallied up again before we broke down. Stops above structure, targets at structure for a nice 80 pips. So essentially this trade paid for the previous loss that we had on the pound Aussie. So we lost 79 pips on this trade, or 72 pips. Then we immediately made it, cancelled it out with a nice 80 pip win with 8 pips to spare. So we had another trade on Litecoin. It's just a couple more trades, guys. We are almost there. So another channel. We had a channel. Let's just start from the daily. You can see the market bouncing off this trend lines, and then I'm looking for a break above this trend line. Let me just take this off, or a break below this trend line. Okay, so now we had a break. So now let's confirm if it's a valid break, and we go to the 4 hour. So we had a break here. No, not a break, but a test. But guys, this is what I'm talking about. So guys, if you have a look, this candle here is only a retest on the 4 hour. But if you have a look on the 1 hour, this was a break. You see? So this was a false break clearly because we retraced again. This is why I like to look for a break on the 4 hour. So that candle there, don't forget this one candle is four 1 hour candles because we're on the 4 hour chart. This one candle is 4 hours in one. So this was a false break. We retraced back up until we broke out right here. Now even then we still had like a retrace back into the channel again, but generally the higher the time frame, the more trustworthy the signals essentially is, I found from my back testing. So we had a break, and then we entered at the break, and we of course place our stops firmly above this nice trend line here just to protect ourselves. Now, as you can see, if you're an aggressive trader, you enter here. If you're a conservative trader, you can wait for the retest, and we had a nice retest. We broke out, and then we had a nice retest, and then we fell off. Either way, it doesn't matter. You are still going to make money, but it does have its pros and cons. So if you're an aggressive trader and you take a trade, you are going to have a lot more opportunities to jump on a trade simply because you followed the you executed straight away. You're not always going to get the chance for the market to come back and give you a retest. Sometimes the market just kind of breaks out and runs. It doesn't always come back for a retest. That's the advantage. But if you're a conservative trader and you're waiting for a retest, first of all, you are going to have a less risk to reward. So let's just say we are looking for a retest. Instead of our entry being here and risking this much, our entry could have been here, because we are waiting for the market to come a bit deeper before we take the trade. So we would have been risking less to make more, but at the same time, we wouldn't always get this opportunity. But if you're an aggressive trader, you get to jump on the trade even when you don't get a retest, but you tend to risk more simply because you entered on a breakout. So it's a give and take. There's no right way of doing it. It's just the best way of doing it for you personally. So just a couple more trades for the week. This is another channel. So onto the daily. as we always do. Just take this off. Here we go. So onto the daily, identify the channel. Fine. This would be our structure levels, the channels, because these trend lines tend to act as support and resistance levels as well. So down to the daily chart, the hourly chart. Normally I would take a trade here, but again, if you have a look, we have a retest here, and if you have a look at the RSI is overbought, and we also have a lower close candle here. But again, I missed this trade. I didn't enter when I got the signal because I don't know, I was sleeping or I don't know what I was doing, but I'm not stuck on my charts all the time, guys. But what I did is I waited for another chance. I waited for another chance to get into the trade, and I identified this little trend line here. And as soon as we broke out of this little trend line here, I pulled the trigger. And as you can see, the market came back to retest this trend line again. And then we had a nice 210 pip winner. Easy money. Now, guys, the last trade for the week. Oof, this is messy. Let me just clean this up. There we go. So, guys, last trade for the week. We've been in this trade for a while. But starting off from the daily, just as we always do, identify the trend, new structure high, outside return, new structure high, outside return, new structure high, outside return, new structure high. We have an outside return coming up to structure. Identify your structure levels. This is your support level. This is your resistance level up here. So structure support, resistance. Drop down to the 1 hour. What are we looking for at this level? We are looking for the market to be oversold. Check. 4.9. And we are looking for a higher close candle. Check. Right here. Boom. So this is not a higher close. This is not. This is. And that's our entry. Now, first targets went to this level here. So if you have a look, the market is clearly having troubles at this area. So identify this area as a potential threat to my higher target. So if you can see, I had two targets. I had a target at the bigger structure level up here, but I also had a first target just below this structure level, just to be safe. I don't want to fight. I don't want to fight the bears. I just want to be in and out as quickly and as efficiently as possible. So I took my first target here. As you can see, the market came up, took me out for first target for 108 pips. And then we, just as I predicted, the bulls couldn't push past this area. Guys, Forex, foreign exchange is psychological. These areas tell a story. It's like reading the Matrix. Make a story of what you see on the screen. Don't be short-sighted and don't be greedy. So we took our first target for 108 pips. Our second target for 200 pips would have been nice, but we didn't get there. But we made 108 pips. That is still okay. I'll take that any day. Now, guys, if you do the calculations, that is exactly 800 pips. I mean, I don't know, but I think that was a good week for most traders. But yeah, that's essentially the trades we took last week. If you've got any questions, I will take them now before we actually jump into breaking down the charts. I mean, we're almost there, guys. Breaking down the charts is not as hard as actually explaining why we took a trade. But I'm gonna go ahead and break down the charts for what I'm looking for next week. So at least when I send the trade, you can look back and say, oh yeah, he said that. So was there any questions before we move on for the final session? Just gonna clean this up a bit. Let's take this off. So now we're done with these trades. You right click and you clean up the chart because we don't need this anymore. We are all done with that. So guys, since there's no questions, pretty straightforward. I'm just gonna break down a few. I've got quite a few. I'm just gonna break down about 3 or 4 of them because they're all quite similar. Again, it's all the same things. So let's just start with the Aussie CAD. So the Aussie CAD, we are at a very, very major structure level down here. If you have a look, this is the daily, don't forget. If you have a look, you know, we clearly have something going on here. So what I'm waiting for at this level is for the market to break and close below this level. So we've come down to retest on the daily. Clearly we've been rejected. So all I'm waiting for is the market to come down, break below, and then depending on how you trade, I mean guys, the market is going to do one of 3 things. The market is either going to come down, break through, and then just keep going, or we are going to come down, break through, retest this support turn to resistance, or resistance turn to support, sorry, because this is a bearish trend, retest and then go. Or what I also find the market does is we break out and the market just kind of does one of these. Just kind of like consolidates, moves back and forth, just kind of takes a breather, not really decided what to do, just kind of moves back and forth, back and forth, back and forth, and then finally we plunge. So either way, we already know what we're going to look for. We're looking for the breakout, and we're looking to take the trade to the next level of structure down here. And then we place our stops, of course, above structure. And guys, if you notice, when I take a trade, I'm always it looks a little bit unfair in a way because I'm risking a lot less than I'm making. I'm risking 37 pips. I would be risking 37 pips on this trade to make 157. That's how you take a trade. You put yourself in an advantage. Okay, I'd never take a trade. I rarely take a trade that's 1-to-1. It just doesn't look right. If I'm risking 37 pips, I must be making at least twice that. If I'm risking 50 pips, I must be making at least 100. So I see people like taking trades where they're risking so much. You know, their risk reward looks something like this. They're risking this, and they're making something like this. This is ridiculous. I mean, it doesn't take a genius to see you're risking 75 to make 300. That means if you took a loss on this one trade, you need 5 more trades just to break even. That's ridiculous. Whereas if you reversed it and you took 1 loss, all you need is 1 win and you will still be in profit. It's all about risk to reward, guys. Win percentage is 1, risk to reward is 2, money management is 3. That's the key to trading. That's your risk. That's your edge. But of course, you need to have a good profitable trading strategy. So that's your little nugget anyways. But just I think we're gonna do one more. So this is a this is a funny one. This is like a channel as well. I mean, we've pulled so much money out of this market in the last few weeks. Ivor would tell you. Um, but essentially, we've just been trading this back and forth. This is a channel we've just been going back and forth, back and forth, back and forth, back and forth, and essentially now we're back to this level here. Now I'm looking at what I'm waiting for. Again, just like as usual, we've had the market oversold. We've had a higher high, higher close candle. Now, as soon as the market opens, I will be placing a trade on this pair, and then I will be looking to take targets at this structure level. If you notice why this is a structure level, again, just look for the abnormalities. Look for look for look for signs of struggle. Signs of struggle create structure levels. So I would be looking to put my stops, of course, below this structure level. And I will be looking to put my targets right around there or just right before there. Because again, I don't want to have to fight any bears in the market sense, not like a real bear. But yeah, so we've already got the first trade of the week that we will be placing at market open. But guys, yes, I will be sending through much more analysis as we go along the week. But I think I'm gonna leave it there for now because we don't want to go on too long. If you have any questions, just drop into the WhatsApp group. Would you guys was there gonna be anyone to was there any like confusion? Was there any questions, guys? Before we close down for the week? Or have I done like an amazing job of explaining everything? I guess I did. Awesome. So guys, I'm gonna leave it there now. This is of course recorded, so I'm gonna be sending that out. So you can watch it anytime you want. But yeah, let's crush it next week, and I will see you in the next one.